Welcome to a special 8-part series of the Banking Transformed podcast, recorded at MeridianLink Live in Nashville, Tennessee. I'm your host, Jim Marous. During this series of episodes, we dive deep into the world of digital transformation in the financial services industry. We speak with executives from a diverse range of financial institutions, each of whom has embarked on a unique digital transformation journey to become more future-ready and responsive to the changing needs of their customers. We explore the strategies, challenges, and lessons learned by these forward-thinking organizations as they navigate the complex landscape of digital transformation. Whether you're a financial services professional, a fintech entrepreneur, or simply interested in the future of banking, this series provides you with valuable insights and inspiration as we explore the cutting edge of digital transformation in the banking industry. We hope you enjoy these candid conversations with organizations of all sizes. Hey, it's Jim Marous from Banking Transformed. Today, coming from the MeridianLink Live event at the Gaylord Hotel in Nashville, Tennessee, where about 1,700 financial institutions, or attendees, I should say, are interacting with each other, interacting with financial services solution partners, and with MeridianLink as they talk about delivering a better experience for members and customers. So, Amber, this is not the first time in Banking Transformed. That's actually, you were on a Banking Transformed show a little while ago. You're from A+ Federal Credit Union. Where's that located?
Austin, Texas.
Great area. And how long have you been there?
6.5 years.
Okay.
Almost 7.
So can you tell us a little bit about your career path, even though, I remember it, a lot of the people listening today may not. And if you can talk not just about your career path, but then a little bit about your organization.
Sure. So I started as a teller, which I think is a great place to start if you work in financial services. So ground up. So started as a teller at a small bank. So I did start at a bank and then moved to a credit union and haven't looked back since working for credit unions. So
what's the difference?
So the people aspect of working for a credit union, it was kind of night and day for me. I was very early in my career, but I could tell as soon as I walked through the doors of that first credit union that I worked at, just the whole atmosphere and the culture was completely different from anything that I had experienced before, and still love it to this day. People helping people.
What's your role at A+?
I'm a VP of lending.
Okay, so you're VP of lending. You come in and the atmosphere, the internal vibe is different. But today, consumers aren't necessarily going to see the vibe of the people because they may not even come into a branch.
Yeah.
And as the VP of lending, I would imagine, like most VPs of lending, you're trying to digitize and make the process more seamless, more digital, and making it so a consumer may not have to come to the branch. Today, how are you trying to personalize that engagement to make it feel like it would have felt like 10, 15 years ago if you went into a branch in A+?
Yeah, that's a great question because it's easy to lose the human aspect with the digital push. So trying to marry those two things, especially in the credit union space, is so critical, not to digitize and automate into someone feeling like they're just a number, but being able to maintain that sense of personalization. And I think the data is key. We have so much data on members.
Yeah.
That we can tap into. And like my organization, A+, we're still kind of in the early stages of exploring what we can do with that. But using it for member outreach, marketing campaigns, to drive interest and present offers that are personalized. And then once they get into the funnel, we tend to call it, do they feel like we know them? We know who they are.
Yep.
We know what the next best product should be for them, or what the value is of the products that we're presenting.
So you're trying to use data to not only make a better digital experience, but also to know your member better. So let's talk a little bit about the back office, the digitalization of the process. Where are you on the journey of becoming a digital loan provider? In the true sense of I can do it on my phone. I don't have to come into a branch. Where are you in that process right now?
We've come a long way over the past few years. So for us, it started with system consolidation because we were using 5 or 6 different just for lending, loan origination systems. So somebody applying online, their application experience could look completely different depending on which product or which channel they were coming through. So we consolidated everything for consumer and mortgage lending into MeridianLink ecosystem, which has been incredible. So it broke down a lot of silos between process, a lot of data silos that we had in the past. So that's really unlocked a lot of potential for us to do just that. And
how good is that experience from your perspective? Because you're continually trying to improve that. How good is the experience today? And what are the big changes that have happened as part of your transformation of moving from multiple providers to MeridianLink?
So we have a cohesive application experience, which was step one, kind of foundational. And into that, we've done a lot of work on automated decisioning over the past few years. But we do a lot of indirect lending. So that was huge in the indirect space because dealers want answers yesterday on their loans. So
yeah, you knew I was going to call you today. So I want to know, what do we approve this person or not? Yeah.
Yeah. And then the same thing for members, of course. If you're applying online, it's not, I don't believe it's other credit unions that we're actually competing against. It's the experience of the Amazons and the SoFis and where everything's instantaneous.
Yeah.
You know, it's.
And predictive.
Yes.
And prescriptive is where we're trying to go as an industry. But it's interesting. I was leaving the house a few days ago and was telling my wife how I had to take my Jeep in to be serviced, talk about indirect. And I was talking about the Jeep quite a bit. And I said, geez, we have to, I can't remember the name of the dealership that I went to the last time, but I kind of knew where it was, but I didn't even know the city because it's not where we live permanently. And all of a sudden I look over her shoulder and on Hulu, I get 2 ads back to back during the news, one of the one dealer, one of the other dealer. I go, oh my gosh, that's the name of and all of a sudden I go, I know why that happened. The damn TV's listening to me.
Yes.
But that process, that whole engagement and personalization process is what people, as you said, expect from Amazon, but they expect from the credit union, they expect from their bank, they expect from their grocery store, and so in that process, how quick can a consumer right now, a member, apply for a loan? I know it's going to differ if they're already a customer, if they are a member, or if they're not. Yeah. But what roughly timeline standpoint?
I would say on 2 ends of the spectrum, a personal loan takes about 30 seconds to submit the application. And if you get an instant decision, you know what the answer is right there.
Because you're taking it off, you're talking about a current member, yes, where you just simply say, I want this now.
Mm-hmm. So you have at least your answer within a minute, less than a minute. On the other side of the spectrum is probably something like a home equity application where we don't have automated decisioning for that, but you can get your application in and know that somebody's working on it within 5 minutes or less.
So the first engagement is 5 minutes or less for every loan. Mm-hmm. And I go on the feeling that if you got my application, if you've done the part, if I'm done with my part, and I simply have to wait for your part, I'll wait a whole longer time than I would have in a world where you're asking me every single part of what I have to do. And again, most organizations can't take information that's already on file and pre-populate an engagement, which is so wildly important. Mm-hmm. Because I don't want to answer the question the 15th time. And God forbid, I've been in a situation where, I opened my first account a week and a half ago, and now I'm saying, you know what, I got to do something else. And you're asking me all the same information again, and because it's either not in the system or it's not accessible or it's just an easier process for the financial institution.
Exactly. If I'm coming to my financial institution, there's a consumer expectation that they should know me, right? You go to the Amazons and the Netflix, and they all know you probably better than you know yourself.
Registering today at the MeridianLink Live event, I only pushed in 3 letters of my last name, and it pulled down my registration. That's what life's become. Mm-hmm. I'll start it, you finish it for me, and make it as simple as possible. So how do you balance that simplicity, that seamless integration with fraud and risk? Because speed and safety are not necessarily a uniform platform, but the consumer wants both.
Yeah.
So how do you do that?
There's a lot of tools out there in the marketplace, fortunately, that and this is really important, that it's doing what it needs to do, but it's almost invisible to the consumer process. So integrations that are working behind the scenes, looking at all of the different data points to vet, is this person who they say they are? And are only inserting layers into the process beyond a certain level of risk, right? And every institution is going to have their own definition of that. But if it's working behind the scenes and it's smarter than those intrusive processes of asking for paperwork, a human reviewing a piece of paper and getting back to you with an answer.
Or asking for for information we just do out of habit, or it doesn't have any bearing on what we're trying to achieve. It's simply habit.
Yeah.
So you haven't been with the organization an extraordinarily long time. You moved up from teller to being a loan officer. How do you view digital transformation at your organization, and what's the next thing? What do you see as the use of data analytics towards not just an easier process, but a more personalized, ongoing engagement?
Yeah, the personalization is kind of our next frontier that we're working through. So we've been doing all of the groundwork layers of making current process easier, breaking down the silos, getting the ability to tap into all of our data. And now it's about how do we mine it to build those personalized experiences. So those are the next processes and initiatives that we're going to be working through over the next couple of years to get that experience where if you log into online banking, does my credit union know me better than I know myself? Is it proactively presenting the offers to me, whether that's loans or deposit accounts or services, whatever it may be, to say, we know you, here's what we think you need best, right? Here's the value for the
offers that we have. So
what are
some of the wishes you have in this whole process? Let's say I'm a mortgage customer or I'm a consumer loan customer. The reality is I get the loan and we don't talk for another 2.5 years, or maybe it's 30 years. Either way, except statements and end of year statements. How do you see that engagement potential going forward, especially from the loan side? Deposit side, we're interacting in some way or form. But how do you see it happen on the loan side so that I remember where my loan is, or you show me that you remember who I am?
Yeah, I love that question. What really interests me is engagement through almost gamification of the life cycle of having a loan. So it's not just a transaction where you get a loan and it's once and done, but now, okay, every time I log into my online banking or I walk into a branch, it's, okay, congratulations on how many payments you've made on your loan. Or if it's the case of a mortgage, congratulations, you've owned your home for a year. You know, these little things that kind of
makes a difference,
make it more personal, and it's not just you making payment transactions for the next 30 years. It's the experience.
Are you looking out for me? I get frustrated because we had a mortgage with a credit union, great credit union. They did really well at what we needed at the time, but rates dropped. And as a family, we're somewhat lazy financially. We don't do everything we should do, and shame on us. But we decided we wanted to get a second, very small place, second home in Florida. Well, in getting the lending for there, we decided, well, why don't we also pay off and move down the rate spectrum from what was 6 to a 2? And how do you go about that? Well, that my previous credit union never reached out until the day we asked for a payoff amount from the other credit union.
Yeah.
And they reached out and said, oh, we can do that. And my only comment back was, but you didn't.
Yeah.
And now in this case, it was really interesting because the CEO of the organization called me. I didn't have any other relationships with him. There was no big deal here. And he goes, what happened? I said, well, you've known my rates dropped. You made a decision as an organization, rather than make him aware of what's going on, we're going to ride this. The problem is, in our case, we increased the size of the overall loan package, whereby the profitability on the relationship was going to be stronger than it was in the past. So short-sightedness, but I get from you that what you're trying to do is avoid those types of situations where there's opportunities and you're actually able to prove what the relationship means.
Yeah, and I love that example because I think it's a huge missed opportunity today. It's easy to chase growth in the terms of the next member or the next loan, the next product. But then there's this huge missed world of just existing relationships and knowing who those members are and what they might need.
So are you challenged by the fact that more than ever, I do a survey of financial institutions when I'm in front of a crowd. I say, how many of you have closed their primary financial relationship in the last 5 years? Nobody raised it. A couple raised their hand. I ask, how many of you have expanded your relationships with other financial institutions, be it a fintech or a tech company or another traditional financial institution in the last 2 years? Virtually everybody raises their hand. And few organizations have taken an awareness of the what I call silent attrition at their institution.
Yeah.
How do you hope to stem that and make it so that your members don't knock on the doors of other organizations looking for something else? And how do you, if you build it, doesn't mean they always come because they may not know it.
Yeah.
How do you keep your members informed that, oh, by the way, we're doing this here?
Yeah. I think the personalization is key, not just in the messaging, but in the channels and the ways that we're reaching out to members. Because not everybody has the same preference of their channels. Some people, small portions, still like to walk into a branch. Yeah. Some of them...
And it's not defined by demographics anymore.
Exactly.
It's just the way people want to do things.
Yeah. So you've got to be able to have that ability to tap into meeting your member where they're going to be. You need to know that, and you need to be there, and then with the right messaging and the right personalization so that they feel that their credit union's there for them.
So you're one channel within, or you're one product line within your organization, and you obviously depend on other product lines to have the data transferred. How are you doing this as an organization from the democratization of data standpoint of not having it just be the IT department that you have to knock on the door and say, oh, can you tell me this? But where you have access. Are you doing that at your organization yet?
Yeah, that's a really timely question because we're in the midst of a data warehouse project right now that's doing exactly that is the goal. It's bringing all of our data sources together, and then we're going through training and accessibility to be able to tap into that data.
And security and everything else that goes
exactly.
with that. But to give you the tools at an instant to make decisions, to do test modules, to figure out marketing programs, whatever it may be. And that's interesting because that is very uncommon for a smaller financial institution. What drives your innovation mindset and your culture from the standpoint of looking for that next thing? Because we all know we can sit back on our laurels. We aren't going to go out of business. And unfortunately, there's a whole lot of leadership teams at major financial institutions that have gone by the same model for the last 30 years, and they've always made money. How do you do that internally? What is different about your organization from an internal standpoint to be kept on? I mean, you're talking gamification. I haven't heard gamification come out of, in fact, the last time I heard gamification come out of somebody's mouth was yours. The last time I interviewed, I'm going like, oh, I know that's exactly the way she used it. But that's interesting because it's not just a mind, it's more than a mindset. What is different about your organization?
I mean, digital and data first is pretty much at the forefront of everything that we talk about. When we talk about, strategy, forward-looking, we have the buy-in top-down to have that be our focus and that be our lens of how we look at how we prioritize initiatives within the organization, where we're looking forward and where we need to be positioning ourselves. And, we're an Austin-based credit union too. So, I mean, this is true for, all over the country, but Austin is very tech
very
heavy
so.
market,
and
right?
Getting more so every day.
Absolutely.
You can read the paper and somebody else has moved to Austin, yeah.
Yeah, so we've got to be there. We've got to be there as a credit union. And
has your leadership changed or is the same leadership thinking differently?
A little bit of both.
Okay.
It's a healthy mix.
But it's interesting because it really, it's not the technology, it's the culture and the employees that can drive the use of that.
It's critical.
Because you can buy stuff anytime. It's expensive if you aren't using it, but we see multiple organizations buying Salesforce but not deploying it.
Yeah.
What is on your to-do list over the next couple of years that you're saying, I'm getting this done? I'm gonna fight whatever battles, but I'm going through walls. Because I just sense from your personality that you're going, I got some things up my sleeve that people don't even know about yet, but I'm gonna win the battle. Yeah. What are some of those ideas? And we'll keep it secret.
For lending, I would say some of these pieces that we've talked about, which we just have not gotten to yet, but it's on our roadmap short term. It's the fraud solutions, digital fraud solutions. How can we do that in a seamless way that's smarter and better identifies risk but is not adding friction into the process. And then we're working through more phases of automated decisioning. How do we keep pushing the needle on that? We have about
automated instant funding or instant dispersion, things of that nature.
That's next. So that's kind of our dominoes that we're going to be working through over the next 12 months.
So you have to pick partners for this. Are you in charge of picking partners for the lending solution, or are you all, because what happens in lending happens in deposits and all these things. How do you work as a team to determine the partners you want to use going forward? Because this is an open slate with every solution you're trying to do, because as you mentioned fraud, you don't, in today's world, which is kind of cool, but also somewhat scary, that you don't have to use the same partner for different components of these composable solutions, because they all have gotten very good at working with each other. I mean, we see here that MeridianLink has put front and forward a lot of their solution partners that they've used to build their solution, but they're opening it up also to you directly, saying, if these are people you want to work with directly, it can be done as well. How do you determine who your partners are going to be?
So we usually start with our best existing partners, start there, evaluate those solutions, and then if they don't have some native solution for the need that we have, then we start looking at the partnership recommendations and the different marketplaces that they have. MeridianLink's got a huge array. So that's usually our start to evaluate kind of next best. And as an organization, that's a tough line, right? Because so many vendors can do so many different things, so many different services out there, making sure that they all talk to each other. And as much as where we can, identify partners that do a spectrum of things that can multi-purpose within the organization.
And work well with the other partners. I mean, they all realize recently in the whole spectrum of the financial ecosystem how important it was to not be trying to defend your turf against another partner. Because the only person that suffers is a financial institution. And guess what? They're the end decision maker on who they're going to allow in. It's interesting when you look at the future. If you look at the biggest opportunity at your organization today, what is the biggest overall opportunity that you're looking at and saying, this is cool, we can do this?
There's so many. I keep coming back to the personalization piece, I think just because it's top of mind for us. That's something we're actively looking for right now is, how do we get a partner? We're looking at potential partners for this, but how do we get something plugged in that taps into our data that can be able to provide those kinds of offers through online banking? This is not just a lending thing. This is across the organization. But how do we do that?
It's automation from the consumer standpoint as opposed to the product standpoint. I'm not going to push loans to a person that's not ready to buy, but I'd like to find out who's ready.
So we've got both ends of it, like the personalization to help drive the right members into the funnel at the right time, right, with the right offer for them. And then once we capture them, how do we have the smoothest, most friction-free process with things like the fraud and the automated decisioning and the instant funding and just everything flows.
Well, it's interesting because, again, the marketplace provides you so many opportunities from a solution standpoint. What I find interesting is your organization, we've had a couple others on the shows recently that are relatively small, but I think are pushing the limits on what even the providers have in the marketplace. Do you find yourself at times asking for something that the provider says, we want to do that because you're right, you're not the only one, and we need to find a way to work with you as, for lack of a better term, a beta site for being able to implement? Are you find yourself in that position as an organization today?
Yes, at times, yes. And at times we've been that.
And sometimes it's really exciting that you can help build the solution, I would imagine. That's very cool because the ability we have recently on our podcast to interview small banks doing amazing things is really invigorating because you realize that size doesn't matter. It's the energy of the people. It's the culture of the organization. It's leadership, because it ends up falling somewhere. And it's the ability to envision what's possible. I really appreciate you being on the show again. It's been a tremendous, tremendous opportunity. You bring back some great memories. And we started talking, I'm just going, this is very cool because you're really fearless, for lack of a better term. And to have the reinforcement of your organization to be fearless. When I ask you about what your future looks like, it was kind of like going, oh, they don't even know what my future looks like. You got to get the basics right.
Yeah.
But the consumer's expecting so much more. I use the example often about you pay $170 a year to Amazon. And it's not for free delivery because you can get it in a lot of other places. It's not for rapid response. You get it in a lot of don't tell me it's your TVs and TV shows and books. No, that's not it. The reality is you're paying for the fact that that organization knows you, understands you, and will customize an experience to you where you don't even notice it. Oh, and by the way, they've never messed up on the fraud and on the risk standpoint, in that you feel comfortable that they're not going to put your relationship, your identity at risk. That's worth a lot of money. And hopefully as organizations, we can realize that there's a value transfer there that we can ask to be paid for.
Yes.
As opposed, not a penalty fee, an opportunity cost that, oh, by the way, this relationship is worth to not get the lowest priced offer out there. Thank you again for being on the show. I really appreciate it. It's been great.
Thanks, Jim. It's an honor.
Thanks. Appreciate it.
Thank you.
Thanks for listening to Banking Transformed, the top podcast in retail banking and the winner of 3 international awards for podcast excellence. We appreciate the support we've received from MeridianLink in making this 8-part series of episodes a success. This has been a production of Evergreen Podcast. A special thank you to our senior producer, Leah Hassage, director, Dave Douglas, audio engineer, Chris Fathalius, and video producer, Will Pritz. Thanks for joining us, and until next time, keep innovating and transforming.